Hi, good afternoon. Welcome to the marketplace. Coming up, Ghana's economic growth slowed to 4.5% in July 2025, down sharply from 8.3% a year earlier. We have the latest from the government statistician.
Ghana's economy, as measured by the MEG, in July 2025, in terms of growth, was 4.5%, larger than it was a year ago.
Also coming up, the International Monetary Fund projects that Ghana's debt-to-GDP ratio will reach 59.1% by the end of the year, slightly below the government's own forecast. Plus, consumers can expect a significant reduction in petroleum product prices at the pumps beginning tomorrow. My name is Daryl Carl. Thanks for being with us. Details coming up. And thanks for staying with everyone. First up, Ghana's economic growth slowed to 4.5% in July 2025, down sharply from 8.3% a year earlier, according to the latest monthly indicator of economic growth released by the Ghana Statistical Service. Despite the slowdown, the services and agriculture sectors remain the key drivers of expansion, underscoring their continued dominance in Ghana's growth outlook. Here's government statistician Dr. Al-Hassan Idrisu addressing the media.
Ghana's economy, as measured by the MEG, in July 2025, in terms of growth, was 4.5%, larger than it was a year ago, in simple terms. While this marks continued growth and it indicates expansion in the economy by 4.5% for July 2025, it also signals a slowdown if you compare it to the MEG figure we recorded in July 2024, which is 8.3%. A clearer trend will become evident when we publish the quarterly GDP estimates for Q3 2025 on 10th of December 2025, God willing. The below trend growth in July 2025 mainly reflects lower output in the petroleum sector, as well as slower activity in accommodation and food services, health and social care, and manufacturing. Across the broader economy, the industry sector has shown the most visible slowdown so far this year. For the first 7 months of 2025, industry grew by an average of 2.7% using the MEG results, compared with 10.8% over the same period last year. Despite this moderation, several sectors remain strong drivers of growth, notably crops, gold production, wholesale and resale trade, information and communication, and transport and storage. These continue to provide resilience and momentum across the economy. And in these subsectors that I've mentioned, we saw expanded economic activities in them.
In addressing the media a while ago, we have some numbers to still share with you. The International Monetary Fund has projected that Ghana's debt-to-GDP ratio will reach 59.1% by the end of the year, slightly below the government's own forecast. George Riafe reports from Washington, Washington, D.C. on the sidelines of the annual IMF World Bank meetings.
According to the latest Bank of Ghana's economic and financial data, Ghana's debt-to-GDP ratio is currently pegged at 44%. Therefore, if the IMF data is anything to go by, then there's the likelihood that the debt stock, which is currently more than 600 billion Ghana cedis, could be going up further in the coming months. The IMF, in its fiscal monetary report, is also looking at the debt ratio declining to 56.1% in 2026. This should mean that Ghana will indeed end 2028 with the debt stock reaching sustainable levels based on the current projections by the IMF. The current end-of-year forecast by the IMF is slightly lower than the 60% that government is said to be targeting by the end of 2025. Government, on the other hand, has argued that it has taken some drastic measures to maintain fiscal discipline post-completion of the IMF program in May 2026.
Well, joining me with a reaction to this, Head of Finance at Melbourne Capital, Nelson Kujo-Kwagbeji. Good afternoon to you. How realistic is the IMF's projection of Ghana achieving a 59.1% debt-to-GDP ratio by the end of 2025, given current economic conditions and restructuring efforts?
Well, thank you very much, Daryl, for having me, and good afternoon to you. Well, I think the projection is realistic. This is because if you look at the tone of government right from the inception of the administration of this government, they have been very clear on their, expenditure rationalization strategy. And to the extent that a certain report released by the Bank of Ghana showed that even though government meets their revenue target by 5%, expenditure was cut down to the tune of about 14%. And so I think that it is realistic, it is achievable. And again, we have seen that as at the end of September, the cedi has performed creditably as one of the best performing currencies in Africa, which also means that the external component of the debt in cedi term will also reduce. And so the figure or the projection by the IMF is achievable if we are able to maintain a stable currency and also continue with our expenditure rationalization policies.
A debt-to-GDP ratio of 55%, that's a target by 2028. What are the key risks that could derail that path?
Well, if you are not able to raise enough domestic revenue, it means that you certainly declare budget deficits. And once you have a budget deficit, you have to go and borrow to finance the deficit. And so one of the fundamental risks has to do with inadequate domestic revenue mobilization. As I did indicate, a certain report released by the Ghana Statistical Service or the Bank of Ghana shows that GRA missed their target by 5%. However, expenditure was contained to the tune of about 14%. And so if we are not able to raise enough domestic revenue, that may pose a serious threat to the projected target. Then also, the stability of the Ghanaian cedi is also another key risk area. For now, we are enjoying relative stability because we have enough effects to support the Ghanaian currency. However, if the currency begins to depreciate, what it technically means is that the external component, the foreign debt component of our total debt stock will increase, and that may also, comes on board to increase the debt stock, and which means that we may not be able to meet the target. So these are the two key risks that are underlining the whole debt management strategy.
How significant is Ghana's progress in debt restructuring of bilateral debt, and what are the implications of the ongoing negotiations with our commercial creditors on long-term debt sustainability?
All right, debt restructuring is a good thing. There are so many ways that a country can relook at its debt. You either renegotiate the debt, you either restructure the debt, you either defer the payment of the debt. And so these are strategies I think the government is adopting with the key objective of cutting down the debt stock. In the long term, the impact will be that our debt stock will significantly reduce, or we may have a sustainable debt level. When we say sustainable debt level, we mean the capacity and the ability of the government to service the debt, pay the principal without compromising the needs of the current and future generation. And so we expect that the renegotiation of the debt would have a significant impact on our total debt stock within the medium to long term.
And while we talk about lowering our debt levels, to what extent can improved public financial management and revenue mobilization help?
Well, as I did indicate, domestic revenue mobilization is key. If you are not able to raise enough domestic revenue, then it means there is a problem. And so for us to deviate from the normal every year budget deficit and also cut down on the risk, we have to mobilize enough domestic revenue. Then in terms of the public financial management, I think the government, as I did indicate, the tone right from the beginning was prudent expenditure management. And that is what we have seen for some time now. I think some of the wastages in the system regarding expenditure rationalization has actually been reduced significantly. So with the public financial management strategies and the enough domestic revenue mobilization of government, I think we can cut down significantly on the budget deficit.
I want to ask you about a top story. The Ghana Statistical Service is doing something pretty interesting with the monthly indicator of economic growth. The latest numbers point to a sharp slowdown in Ghana's economic growth from 8.3% to 4.5% year on year. What factors can explain this sharp slowdown, and what could be a cause for concern going forward?
All right, so the monthly indicator of economic performance as released by the Statistical Service may not actually give a clear picture, as the director himself indicated, because it will be better to look at it on quarterly basis. However, from the indication that we have seen, the industrial sector is not doing too well. I mean, if you look at it right from the beginning, we realize that agri and services sector have been contributing significantly towards the growth, but industry has not been performing too well. I think there are some bottlenecks. I think there are some challenges within the industrial sector that government needs to fix. And once those things are fixed, I think the industry will bounce back as one of the largest contributors to the growth rate. But then, as I did indicate, it will be too early to justify that. I mean, we should wait. As he himself did indicate, the third quarter will be ready by 10th of December. And once we do the quarter-on-quarter analysis, we can see really where the issues are coming from.
All right. Thank you so much, Nelson Kujo-Kwagweji, who is the head of finance at Mebank Capital. I appreciate your insights this afternoon. Well, let's talk fuel. Consumers can expect a significant reduction in petroleum product prices at the pumps beginning tomorrow. This follows the latest Outlook report, which provides pricing guidance to oil marketing companies across the country. More details in the following report.
The expected reduction has been influenced by the cedi's appreciation against the dollar over the past 3 weeks, as well as declining crude prices and those of finished petroleum products on the international market. Projections from the pricing outlook show that a litre of petrol should go down by as much as 4.15%, which could result in it being sold at 13 cedis, 93 pesos. The price of diesel, on the other hand, could also be reduced by about 4.10% and may result in a litre at the pumps selling for 14 cedis, 56 pesos. VAT of the liquefied petroleum gas will drop by more than 4% per kilogram. However, some market watchers have argued that it is likely most of the oil marketing companies may not review their prices, since many of them did not increase prices when they were supposed to do so at the beginning of this month.
While the cedi has appreciated, moving into the 11 cedi range against the US dollar on the interbank market, this development is based on quotes provided by some major commercial banks to clients for various transactions. More in this report.
Our checks with some of the major commercial banks have shown that in terms of trading among themselves, they are selling a dollar between 11 cedis 50 pesos and 11 cedis 60 pesos. Now, if these banks add up their charges, the dollar should be sold at 11 cedis 80 pesos to the public. According to some of the banks, the cedi's good run has been influenced by recent regulatory measures that have helped improve dollar supply on the market. One can talk about the Bank of Ghana's decision to increase the amount of dollars it offers through its auction program due to profits coming from rising prices of gold on the international market. However, some market watchers are already worried about the sustainability of this good run. Others have also argued that with the demand for dollars to satisfy imports for December Christmas season, this good run could still be described as sustainable.
You're watching The Marketplace. We are taking a short break. When we come back, the Joy Business Poll. Don't go anywhere. Welcome back to The Marketplace. Rwanda raked in $84.8 million from just 115 international events in 2023, a clear signal of what's possible with the right infrastructure. Now, the managing director of Labadi Beach Hotel, David Edwafo, believes Ghana could achieve similar success if it invests in a world-class multi-purpose conference facility. But with competing national priorities, the question remains, should government break the bank to make it happen? That's the question for our poll this afternoon. My colleague, Isaac Atasenyako, has been tracking what you're saying on social media, joins me in the studio to talk to us about that. But first off, Isaac, you have been speaking one-on-one with the managing director for Labadi Beach Hotel, David Edwafo. Yes. What's he been telling you about infrastructure, hosting events, and what it can do for our economy?
Well, for David, he believes that government should take that step. The first step begins with government. Well, he thinks that a government is able to build that multi-purpose conference facility, large enough to hold, conferences about 5,000 and more. The rest will follow. So when he says the rest, it means the value chain actors will come in line. So hotels will spring up. Existing hotels would have to expand because what they know is that in a year, they can have up to about 2 or 3 conferences filling up their spaces, which means that there's room for business. And so there will be lots of expansions, lots of hotels will be built. Then the ripple effect. Now, if a hotel is being built, definitely we've got to get a contractor on site, the whole value chain with workers, even the small local economy for people who buy by the roadside, food vendors and all of these things. Now, beyond that is a broader tourism, perspective. Now, if these people come in, a lot of these conferences have aspects where they are supposed to get into town, walk into town, experience the sights and sounds of the country. Right. And so with all of these, he's saying that our tourism sector could expand. Maybe we should listen or watch David.
Okay, we are going to get bits of that interview playing.
Which cannot do a lot of things. We need a proper mines center. Mines meaning meetings, incentives, conference, and exhibitions. Elsewhere, they call it convention centers. If you go to South Africa, they call convention. Go to Rwanda has a big convention center. Why do you think all the conferences that are held we go to? They'll go to Rwanda. Do you know how much we lose when we don't get these conferences? Look, we need to take the bull by the horn and do things right and put our priorities right. We need a big convention center that can take international conferences. And that has to be spearheaded by the government. Yes, private individuals can do that, but some of these things, it is important that, the convention center we have, the current conference center, it has outlived its usefulness. We need something 4 times the size of what we have. 4 times the size of what we have, with proper breakout rooms and all these things and exhibition halls and every totality. We go, we travel, we see. Why don't we replicate it here?
So those are his views. And so you've been tracking this on social media. I see you have some data here.
Great. So I got this from the Rwanda Development Board. Now, these are some of the figures they put out. So right there, that's it. 2024 at a glance, Rwanda's year of growth and resilience. Now, let's come to the last, session. Tourism and mines. That's what David was talking about, conferences, incentives, and the rest. Now, they raked in $84.8 million in just a year from 115 conferences. Great. Now, we all know Rwanda has a very big, ultra-modern, facility that's able to do the large conferences. They even hosted the basketball, some basketball editions there as well, pretty large, that can host all of these. So we are saying that, can we also, put up a facility that can help us raking, pretty similar, if not same or more? So we'll move to the next slide. where we decided to go on social media and engage our audience as to what they think. So we asked, Rwanda made $84.8 million from 115 events in 2023. Now, Labadi Beach Hotels MD says Ghana can do same. Should government break the bank for a multi-purpose conference facility? Interestingly, on
existing facilities first, 76% think that should be their priority right now.
Exactly. So that's what people on Facebook think. They think that, well, the priority should be fixing existing facilities first. But interestingly, David disagrees, Darryl.
Okay, we've got a minute. I just wanted to alert you, so let's just quickly do this.
This on X.
Yes, to boost tourism, 35.7 people think the government should break the bank for a multi-purpose conference facility.
Great. If we move to the next slide. Now, this comment really struck me, so I decided to stick with it. I mean, Enoch Darko says, have we all eaten? Are we satisfied? Joy FM. If not, why build a conference center? But you will agree with us, Enoch, that the benefits far outweighs we being just satisfied and we eating. So
we've got to go. Thank you, Isaac Atosanyako. Appreciate it. And that's the marketplace. Thanks for watching. More news on our website, myjoyonline.com/business. We leave you with our international summaries.